Hi, I'm Jerry Bowyer. Thank you for listening to Meeting of Minds podcast. My guest today is Treasurer Marlo Oaks. He is the treasurer of the great state of Utah, and he just had a terrific article in the Wall Street Journal on the editorial page, which I think is the most important editorial page in America, maybe the most important page among newspapers. And then more recently, a really good follow-up piece on foxnews.com. So Treasurer Oaks, thanks for joining us today.
Thank you. And I believe it was Fox Business.
Oh, you're right about that. I thank you for that correction. It is Fox Business News, and it is a business issue. And I guess that's your point. Your point is that business is business, and there are financial rules, and that this ESG stuff, and we can define that in a moment, is taking politics out beyond politics and shoving it into financial markets. That seems to be your objection.
That's exactly right, because we have different institutions in this country to address different issues. We have political institutions that are political in nature that address political issues. The business world is not meant to deal with political issues, and that's what we're seeing today, the politicization of everything. And I think it's very detrimental to our country.
So the example here, we're talking about ESG. Now, people who watch this know what that is, unless they've wandered into Meeting of Minds for the first time. Why don't you kind of lay out for people what those initials are and what that means?
Yeah, so ESG stands for environmental, social, and governance. And it's really, I call it a political scoring system. It was born out of kind of the socially responsible investing world, which really has religious roots, right? The idea that I'm going to avoid certain investments because of my own values. ESG took it one step beyond that and really became aggressive, I would say, in the last 2 years or so. And that is the ESG advocates engage with companies and engage with the market to change them, to drive a political agenda under these different areas, environmental, social, and governance. And, climate change, of course, under the environmental, social justice issues under the social part, and then just different governance issues. Governance is really kind of more of a traditional shareholder activist, those kinds of issues. But you do see like board compositions, for example, that are being politicized now under the governance section. But anyway,
I think an example of that I'm seeing a lot is under the diversity label, which is I'm seeing a lot of proposals which are your board should numerically, if 35% of your customer base or your employees are of a certain gender or ethnic identity, then 35% of your board should be, for example. And that's not a meritocracy. That's essentially political.
Absolutely. That's right. And what is the purpose of a board, right? I mean, you're overseeing a business and lending support to that business to help them succeed. This isn't a beauty contest. This is business. We're trying to make money for the owners of the business and to serve society. I mean, at the end of the day, businesses ultimately serve society. If you don't serve society with a wanted or a demanded product or service, then you go out of business. And so I think sometimes capitalism has been demonized because, the greedy shareholders. But at the end of the day, I view it as companies providing a good or service that has value to society. And that's ultimately what the board is overseeing, is that business.
The board works for the shareholders, or at least they're supposed to, right?
That's right.
So look, I wouldn't be for any quotas, but if you're going to really, kind of twist my arm and say the board composition should match something, I'd say, well, the shareholders, I guess, right? Because they represent the shareholders. Now, no, we don't need to do that. Let's just have just go for the most qualified board members, and then you let the race and gender be a byproduct rather than a goal. That doesn't mean you can't spend extra time looking. You can't say, well, because of network effects, maybe, some groups really are underrepresented for reasons that don't have to do with merit. Okay, that's great. But these proposals are not saying that. These proposals are saying you have to hit this number or you're racist and sexist, which of course that's a political, it's an ideological statement, has nothing to do with finance, and there's no evidence that accrues to the benefit of shareholders.
That's right. And the idea behind diversity, right, was to have ideological diversity. And it's sort of this demographic diversity was the first shot, I think, at trying to address that. Because there is value to ideological diversity and getting different ideas, to improve outcomes. But that's clearly not what's going on here. This is very much it's not addressing ideology. In fact, in some cases, it's pushing to one ideology with the agenda that ESG represents.
I've reviewed several hundred diversity proposals in the last year. Not one of them mentions viewpoint diversity. Not one of them.
That's right.
But they argue different ways of thinking are valuable, but they don't include different ways of thinking in their criterion, which is very strange.
That's right. And in fact, efforts to add that as a shareholder proposal has been rejected in a lot of cases by either the company or the SEC or I think those are the two primary
or the proxy services.
Yeah, or the proxy service. That's right.
I had a conversation with ISS about this, and I said, "Why do you support every kind of diversity except that?" And they said, "Well, how would you measure it?" And I said, "I don't know. Ask them."
Yeah.
How about that? Just it's part of the interview process. Tell us something about yourself, including your political philosophy. Or maybe they disclose their political contribution. It doesn't really, you're smart people. I mean, you want them to do studies about the impact of climate change in 2050. That's not too complicated, but just asking board members, what are your political views? That's just, we can't handle that. Yeah, that's too complicated.
No, well, and what's interesting is that the change in administration you typically saw in the past, people coming out of an administration and going into corporate America and going onto boards, that didn't happen nearly at the level that it did in the past. And you remember how demonized people were for even serving in the last Republican administration.
Yes.
Right. And so that's very troubling when you're demonizing an entire point of view in the marketplace and shaming people and shaming companies to prevent them from adding that kind of viewpoint diversity in their boardrooms. It's a very interesting trend.
I'd love to see an analysis of ex-Obama officials on boards compared to ex-Trump officials on boards. What's it going to be, 100 to 1?
Yeah. I mean, it's crazy. Yeah.
That's so they're not really trying.
No.
So so if we just get rid of that and focus on merit, then I think we kind of solve the problem. All right. Yes. So you mentioned, we can go deep here. This is meeting of minds, right? The word minds is in the title. You mentioned plurality. When I was in college, and that's some time ago. So when I was in college, my liberal college professors taught me a political philosophy called pluralism. Different institutions, different points of views, and in the electoral process and in all these other processes, we work out our difference. Now, it seems to me that at least the kind of liberalism, progressivism, whatever we're dealing with now, is anti-pluralistic rather than pro-pluralistic.
That's right. No, that's exactly right. Because really, ESG can only be successful without plurality. You have to have one point of view. You have to get as much capital to agree to one agenda to drive that agenda. Otherwise, you would have one bank stepping in where another bank refused to do business. So, for example, if one of the largest banks refused to lend money to a fossil fuel company in a free market capitalist system with plurality of views, another bank would step in and provide that service or the capital. To be successful, and this is why I think socially responsible investing gave way to ESG. Socially responsible investing allowed people to have their own values and implement their own values in a portfolio and respected the values and the views of other people. ESG cannot do that because it would not be successful if it did. So if if I can capture the largest pools of capital and commit them to net zero climate change, then I have power to drive that agenda through the capital markets. That's the
Interesting.
only way it can be successful. And it has to destroy plurality to get there.
Coercion isn't the bug. Coercion is the feature,
That's
right?
right.
Right.
Yeah,
And this,
that's right.
you're kind of making it. You're making a lot of interesting points, and one of them is that when you're talking about gigantic asset managers like a BlackRock, we're not talking about organic growth. Where I can tell you, I've talked to hundreds of financial advisors, and I always ask them, how many of your clients are asking for ESG products? And the answer is almost always zero.
Yeah.
Maybe like they've got a client and the client's children ask a question about it. That's
Mm-hmm.
it. This thing is not coming up from the bottom. It's coming down
No,
from the top. And a
that's right.
BlackRock, which essentially grew through acquisition, it's not organic, just like buy competitors and gobble them up till you have $10 trillion in assets. And then have that easy credit from the Fed, right? Because they're administering. So in essence, they're pretty dependent on government. It's almost like it's not clear that they're really not almost like quasi-governmental entities, given their relationship with central banks and given the licensing and given like the revolving door between people who work for
Yes.
administration, then BlackRock, and same with Goldman Sachs, whatever. They just kind of go back and forth. So you almost have like this one ruling class. Sometimes it
Mm-hmm.
works in the private sector, sometimes it's in the public sector. The resume kind of bounces around, but it's basically the same group of people, and they're trying to impose their agenda on us.
That's right. And they're doing it with our money.
Yes.
Um, and so that's one of the challenges here is that you have some of our largest institutional investors. So I worked at a large institution and oversaw the investment portfolio there, and the underlying policyholders, because I was at an insurance company, right? They're all going to have different views, political views. But that money is all aggregated at the insurance company, and then we went out and hired investment managers to manage that capital. In the case of a pension plan, the same thing. A large state pension plan is going to have the money of beneficiaries that have all different kinds of political views, and then they go out and hire an investment manager. And really, the compact that we had in this country for so long was that we would keep politics out of that investment management relationship. Once that broke down, then we're seeing the adoption of one political agenda that is not shared by the underlying investors or the asset owners, the beneficiaries. And so it really is doing a massive disservice and frankly, breaking the law, our fiduciary
Fiduciary
standard.
responsibility,
That's
absolutely.
right.
Right.
That's exactly
Did you
right.
did you see this coming back when you were working in capital markets? Did you see like the beginning of the camel's nose coming into the tent?
It's interesting. I actually worked on launching a socially responsible fund, but I came at it from the perspective of kind of more of a conservative angle. Like the idea was if a business, if their product or service undermined the family,
Mm-hmm.
then that was ultimately bad for society and would lead to long-term degradation of society and therefore hurt profits and hurt companies, et cetera. So I had a lot of experience with the socially responsible investing area, and I did not see. I'd heard of ESG, but I did not see how aggressive it had become. It was only when I became treasurer and really started looking more closely at it did I recognize what had been a perfectly acceptable strategy in the form of socially responsible investing turn into a course of capitalism, essentially, and those features that are so detrimental or could do significant harm to our country became a little bit more obvious when you could see politics being moved out of the political realm and into our capital markets, essentially undermining the constitutional form of government that we have and destroying free market capitalism.
Well, it's interesting. You wrote that piece for the Journal, and then I read, a letter to the editor in response, which said basically, well, this isn't the liberal agenda. This is bipartisan, written by two people who are part of a liberal, think tank, a liberal advocacy group. So, my view is if liberals say this is nonpartisan and conservatives say this is partisan, it's partisan.
Yeah, yeah, that's right. That's
So,
right.
oh no, there's nothing. We're not doing any. Oh, if half the country, if the liberal half the country, we're not doing any politics here, and the rest of us
That's
say,
right.
sure, yes, you are, then we are. And another point about this is what I've seen from ESG is the argument is always, well, look, everyone agrees with this. This is the inevitable future. The march of history is that your oil and gas and thermal coal certainly will be stranded assets. And if you have anything in your portfolio that makes guns, the culture is shifting in such a way that you will be completely alienated from polite society. And therefore, since that's going to happen inevitably, fall in line now, right? So there's a
Yeah.
kind of almost an eschatological view here. And so ESG is safe, except look at this year was the year of a huge conservative backlash. So ESG isn't safe. And if it isn't safe, I'm sorry, what is the leftover premise for shareholders? It's just another area of exaggerating reputational risk by getting embroiled in a controversy. And that's kind of the only one selling point they had. That was it.
Yeah, well, and it's clearly the misallocation of capital, and it's driving to one future view, saying, okay, this is where the world is going to end up. Never mind that we've never been able to figure out where the world is going. So that again gets to this destruction of plurality, and this drive to have everyone adopt the same viewpoint is crazy, because at the end of the day, one of the most powerful institutions that we have in this country, and what has created more wealth in this country than any other system, is our free market capitalist system. And in fact, one of the professors that I had in graduate school, he wrote a very famous paper on orange juice futures markets. Who is better at predicting the weather? Was it the markets or the meteorologist? And you think about the meteorologist, that's your expert, right? And they can tell the future because they've been to school and they've studied the science and all these things, right? But it just so happens that when people put money on the line, and there's a lot of different views, you come to a better outcome than you do with depending on the expert. And so this notion that we're going to do away with our markets to comply with some expert's view of the future is not in anyone's best interest, and in fact will lead to suboptimal outcomes. If you're really concerned about climate change or any of these other issues, then you should be completely against ESG, because it undermines the markets where we're going to have the best outcomes and create the most wealth for all of us.
That is great. It substitutes a less efficient forecasting system for a more efficient forecasting system.
That's right. That's right.
I mean, you want to know what's socially beneficial. You want to know which states are riskiest. The smartest answer is which states have the lowest bond yield, right? Because the risk premium, they know, skin in the game. I'm an investor. Right. I'm an investment. Skin in the game is better than expertise by a long shot.
That's right. And in fact, you can take or you can figure out the market implied probability of default as an indication of what the market is saying about a particular credit, right? And so that has more information embedded in it than does a credit rating by some outside entity.
Much more. I mean, the credit rating is almost a lagging indicator, right?
Oh, absolutely.
It's like everything's great. Then after it blows up, oh, everything wasn't great.
That's right.
And I think the market implied even beats the Altman Z's and the Olsen O's, all these complicated things. And I use them. I'm in markets, right? But people with skin in the game, Hayek says most of the knowledge is out there.
That's right.
So there's 7 billion people, 8 billion people who are investing. Maybe a billion of them are really, have a significant number of assets. That's a lot of knowledge, and that knows. I'm an economist, but I trust the market's forecast over my own modeling forecast because
that's right.
Because I only have the amount of knowledge I have, but the markets have the knowledge of maybe a billion participants.
That's right.
And what is the market saying about Utah's bond ratings or about Utah's bond yield? Low risk.
Yeah, exactly. That's right. And in fact, we typically trade like the treasuries In the taxable, market, Utah is that same curve, if you will, the lowest rates generally in the municipal market. So I've told people for months that we have the best credit rating in the world, but it may not matter if we have a separate ESG score. Because then you have an outside entity in the form of a credit rating agency intermediating itself into the politics of a state, saying whether we are worthy to borrow at the lowest rates in the capital market based on politics that they have no business opining on.
I wonder if this might start to become more important now. So bear with me. You're a CFA, right? So
Yeah.
this is this is well within your ability to have this conversation. I can't have this conversation with everybody, but municipal bonds are a hedge against taxes, right? Tips are a hedge against inflation. You're a hedge against rising individual taxes. So to the degree that we're moving in a pro-tax hike direction with the current administration and with the Trump tax cuts, they're sunsetted, et cetera, then municipal bonds become more important as investors move towards them to deal with the hedge against taxes, which means it's all the more important for, say, asset managers not to say, well, Illinois is better based on political criteria than Utah is, and shoving retirees into high risk munis. They're going to get away from taxes, but they're getting all this default risk because the capital is being politically allocated. You see what I'm driving at there?
Yeah. No, that's exactly. It's really adding a second layer of criteria that isn't relevant to getting paid back as an investor, right? It's serving two masters, right? And we know what happens when you do that. Having the fiduciary hat on is the most important thing when you are managing other people's money. Do it with your own money, that's fine.
Right.
But when you're managing other people's money, you owe it to them to focus strictly on their financial well-being.
You're quoting the master there. I've been reading James lately, and he talks about a double-minded man is unstable in all his ways. And it seems to me that these agencies, if they're giving themselves a dual mandate, have to be daisuke. They have to be double-minded in some sense. What are we? Are we political advocacy groups, or are we genuine credit rating agencies?
That's right. That's exactly right. And it's interesting. They make the argument that this has always been part of the credit rating. And I said, okay, if it's always been part of the credit rating, then keep it part of the credit rating. Don't make a separate ESG score, because they then call out things like adverse publicity associated with reputational risk, or that leads to reputational risk. That has nothing to do with a credit rating, the reputational risk of an entity. It's crazy.
Right. And especially considering the investor base.
Right.
The investor base in general is more conservative than the population in general. And municipal bond investors are, first, as bond investors, they're going to skew a little older. As municipal bond investors, they're going to skew more affluent. So frankly, they don't really care about the woke agenda. This is a highly conservative demographic, which means I'm not really worried about you, because I think that smart investors are going to find their way to your bonds. I'm worried I'm worried about like all the people who get shoved over, like pension plans or whatever, retirees who are part of aggregators who end up getting put in high risk bonds because of these standards.
Well, and one of the biggest buyers of municipal bonds are insurance companies. And so they are susceptible to politicization. In fact, we had one insurance company that refused to bid on business of a power generator here in the state of Utah. And why was it? It's because the power is coal-based power. So you have an insurance company refusing to bid on business because it's the wrong kind of business.
Profitable customers that they're firing.
Yeah, and a critical industry. I mean, think about it. If we're going to cut off power to people, right? I mean, what does that mean? We're talking about moving to an 1800s lifestyle. It's crazy.
Yeah, and by the way, I mean, insurance companies, people depend on insurance companies. I mean, talk about
Absolutely.
fiduciary responsibility. Going back to the Bible, it's required of a steward that they be found faithful. And
Yes,
for insurance companies, that's job number one is to stay solvent so you can pay the claims if they should
that's
arise.
right. That's exactly right.
And for
And
a
so
pension manner, it's the retirees.
that's right. And so what this agenda has done is attacked our financial services industry at the highest levels. So the largest companies, they've gone after the largest companies because they know if they can get them on board and get all of those assets behind the same agenda, then they can drive that agenda through society without bothering with a legal or a political body like a legislature where
Interesting.
the process can get messy.
Yeah, they can't win in state legislatures on guns or on fossil fuels. I had a
That's right.
conversation, I was off the record, I won't mention, but a large insurance company. And we talked about the fact that in their investment pool, there's no gun manufacturers. And they admitted that might hurt returns, which really means it might hurt off the record,
Yeah,
private meeting. But that if it hurts returns, it hurts the ability to pay people out, when
that's
they've
right.
trusted you. Fascinating.
Yeah, that's right.
Very distortive. Anything else you want to say? I know we've ranged far and wide, and I've enjoyed it. Anything else you want to say about this that we haven't covered so
Yeah,
far?
yeah. I mean, for me, the biggest issue is the politicization of our capital markets, and I don't really get into the underlying politics of climate change or social justice necessarily. I mean, they are concerning to me, but I leave that up to the legislators because they're the political body. I don't want politics in the capital markets, which is where I operate as the treasurer. I am trying to depoliticize the capital markets and get the politics out of that arena and put it where it belongs. And we've got to have boundaries in our country. We've traditionally had boundaries around our institutions. We have to keep those boundaries, respect those boundaries, and we've got to be very careful about the substitution of our pluralistic institutions for centralized control, which is essentially what ESG does.
Fascinating. I mean, politics. I'm not sure that politics even works in the area of politics, but it sure
That's
doesn't
right.
work when it gets into other areas. And yours is not a political office. Yours is a
No, that's
yours is
right.
a fiduciary office.
That's exactly right. And I liken it to what happened in. Oh, excuse me. Um, I liken it to what happened in Jurassic Park when the scientists turned off the power, and suddenly the Tyrannosaurus Rex got out of his electric fence and started eating the human beings. Right? I mean, when politics escapes its natural boundaries, it's like a monster that can consume all of us. And just because you think the politics are in your favor doesn't mean that you aren't going to get eaten. It just means you might get eaten last. And we should all be for putting boundaries around our political system.
The guy who turned off the power was the first one who got eaten, wasn't he? Newman from Seinfeld, right? He was the first one. So when they take down those barriers, G.K. Chesterton said, "Don't take down a barrier unless you know why it's there." They take down those barriers. You never know which way things are going to go in the
That's
future.
exactly right. And we've got to put the dinosaurs back into the cage.
Interesting, and that's what politics is. It's pure power.
Yes.
And it fine in its zone. That's a fascinating observation. Well, Treasurer Marlo Oakes, I want to thank you for being with us on Meeting of the Minds. I really enjoyed this conversation. I want to thank you for what you're doing, not just on behalf of the citizens of your state, but you're leading a coalition. You're out there ahead, dealing with other treasurers and leading the way. And that's important. And in my opinion, it's just beginning. I think this is what did Churchill say? It's not the end of the it's not the beginning of the end, but it is the end of the beginning. For
Yeah.
years, conservatives slept while activists kind of took over, and now we're awake. And
Yes.
we're not going back to sleep anytime soon.
No. And I really appreciate you having me on, Jerry.
Yeah.
It's been a pleasure. And these are very important topics. People in America need to understand what's happening with their capital, and they need to reach out to their companies and or their investment advisors and explain to them that they do not want their money politicized. and they need to get out of BlackRock, Vanguard, State Street, move to other investment strategies where hopefully their money will be managed in a fiduciary framework.
That's a great point. By the way, I should mention State Financial Officers Foundation, which you're part of. This is sort of the clearinghouse for people like you and for people who are listening. Check out the website, and if your treasurer or controller, etc., is a good one, and they're not, involved, maybe ping them with an email saying you need to get involved with this stuff.
No, that's right. And people can also go to my website, Marlowe Oaks, MarloOaks.com. There's a section called Stop ESG. I have several articles there, some interviews. You have the opportunity also to donate to my campaign. I'm on the ballot this year. So appreciate the support and really appreciate the opportunity to come on and talk.
I like your chances in November. MarloweOaks.com, Stop ESG. Thank you so much, Treasurer, for being with us.
Thank you.